Hi everyone, welcome back to What Happened to Crypto. My name is Steve. Today I want to talk about the Bitcoin price action yesterday. Yesterday was a roller coaster ride. Everyone was anticipating Bitcoin to go above the all-time high at 69,000, which it did. And then everyone was anticipating Bitcoin to continue to go up, but it did not. It turned around and started decreasing, crashing for 5 hours straight. So that would be a 14% decrease. So what really caused that crash? Today, I want to dive into some of the reasons that caused this crash. So to start, I want to talk about the Bitcoin futures market. And if we take a look at the open interest of Bitcoin right now, we're at an all-time high. The last time we have this high of a level is back in 2021 at the top of the bull market. What open interest means is how much money people put in to buy either long or short positions in the futures market. And usually when people use futures market, they're using leverage. So keep that in mind. Now I want to take a look at the swing failure pattern, SFP. SFP is a false breakout trade. If you take a look at this diagram, this green candle right here, the top of this green candle, when the price goes down and then goes back up to the previous swing high, there are a lot of momentum traders like to do breakout trade. They will enter long positions here. They will open the positions, but if the price doesn't go up enough and comes back down below the swing high, a lot of the short sellers recognize this and they will open short positions. When they open short positions, they push the price down. If they can push the price down enough, they will liquidate some of the long positions. When long positions get liquidated, what happens? They're forced to sell their coins. When they're forced to sell their coins, they push the price down even further. And that's how the SFP short sellers make money. Now, keep that in mind. Now, if we go back to the open interest for Bitcoin futures, yesterday we have this historically high level of open interest. That means there's a lot of long positions that can be liquidated if there's enough short sellers to go in and short the market. And yesterday was a perfect example of a swing failure pattern. So the Bitcoin price yesterday, it went above its 69,000 all-time high and came back down. That's an SFP. Short sellers saw that, so they short the price down. When the price goes low enough, it forces some of the long positions to get liquidated. When long positions get liquidated, they're forced to sell their coins, which push the price further down. That creates a cascade effect until there's no more long liquidations. And that's what happens yesterday. The short seller yesterday is not the only selling pressure. We also found out there was an OG guy who mined his Bitcoin back in 2010. He was actually selling his Bitcoin yesterday, right around the all-time high level at 69,000. He sold about 5,000 of them, so that would be about $350 million worth of Bitcoin. So that's a lot of additional selling pressure contributed to the sell-off yesterday. Now, I just wanted to show you guys the Bitcoin ETF flow. Take a look at the last few days. We have $500 million, and then yesterday, $600 million net inflow into the Bitcoin ETF. So what I'm trying to show you guys is the state of the Bitcoin demand is high if it's not accelerating, okay? So there's no reason to worry about a flash crash due to short-term traders trading to make a quick buck, because the fundamental is there's a lot of demand for Bitcoin out of ETF, and not to mention other retail investors will be coming in, as well as some of the institutional investors will be coming in as well through Bitcoin ETF in the next few months. Bitcoin will break its all-time high soon again. This is not the top of Bitcoin. It's not going down. Just enjoy the show, have a cup of tea. I'll talk to you guys next time.